Thanks for joining us on The Big Story. I'm Harsha Subramaniam. India's top consumer companies continue to grow even as industrial production and the overall economy slow down. So what's going on? Will consumer demand continue to grow even as the economy slows down, or will it begin to lose steam? Joining us to discuss that are the Godrej Chairman, Godrej Consumer Products, and Vindy Banga, Senior Partner at Clayton, Dubilier and Rice, also the former head of Hindustan Unilever, India's largest FMCG company. Gentlemen, many thanks for joining us on this discussion. Before I start, let's go head across to my colleague Tanvi Shukla to get a sense of how well the FMCG companies have done this quarter, and more importantly, what's leading to this resilience. Tanvi.
That's right, Harsha. Most companies have already announced the results for the Q4, have registered very, very strong growth numbers, whether it's on the sales front or even on the profitability front. So if you really see, let's begin with the biggest FMCG player, which is Unilever. They just came out with their results early this week. They registered a growth of 16% on their net sales. If you see the domestic consumer business, that actually grew by 20% in the last quarter. In fact, for the entire financial year, FY12, they grew at about 18%. So strong numbers there. Again, Dabur registered a growth of 22.4% on their sales growth, and Godrej registered a growth of about 31%. Now, Godrej, of course, has had a higher growth because they've factored in all the acquisitions that they've done in the past 1 year, specifically the Darling acquisition that they did in Africa last year. So that's kind of boosted their numbers far more than the other companies. But if you really see what exactly is boosting this demand and this growth for FMCG companies, there is very, very strong consumer growth across the board, across portfolios, various segments, be it personal care or other products, both in urban areas and rural areas. And it's not just the volumes that we're seeing which are growing a lot. The companies have actually managed to take a lot of price hikes in the past 1 year, steep, significant price hikes across the board of 5 to 10%, even 15% in certain categories. And despite that, they've seen very, very strong volumes growth. For example, Unilever actually registered a volume growth of 10% on an overall 16% sales growth. If we go ahead and see what else is really happening there, there is a very, very strong rural demand which is really taking place. So we'll see that because of all the NRE, schemes, there is a lot of strong purchasing power which has really come into play for all of these companies. So what is happening is most of the companies are really focusing into their the rural NRE, schemes and increasing their distribution, and I'll just try to figure this one out, but increasing their distribution on the rural front. For example, Hindustan Unilever has actually increase their distribution by 3 times in the last 2 years in the rural area. So it's not just that the new consumers are coming in, they're coming in with a strong purchasing power, which is helping these companies sell higher value products to them in the rural areas. You will see similar numbers in terms of distribution reach for Godrej, for Marico. They're making heavy investments when it comes to the rural area. If we sit and talk about what is happening in the urban area, there's a lot of premiumization that has taken place, that they're introducing higher price products which consumers are buying. So from a 5 rupee pack, they're actually ready to pay 8 rupees or 9 rupees for a simple product just because they are aspiring consumers. What else is really boosting their growth? Well, greater international market contribution to all of these companies. They've been very, very active when it comes to inorganic growth, especially in emerging economies across Africa, Southeast Asia and Latin America. Godrej has made about 5 to 6 acquisitions in the last 3 years. Marico has made several acquisitions in Africa, and the same goes for Dabur and in fact even Imami, Harsha.
So there's volume growth, value growth, acquisitions. What slowdown are we talking about? Tanvi, thanks so much for joining us and putting that in perspective. Mr. Banga and Mr. Godrej join in on this discussion. Mr. Banga, I'll start with you. You know, India's industrial production is slowing, and we've been talking quite a bit about it, while its consumption seems quite robust. How do you see this dichotomy, and what's your own assessment of consumption demand?
Well, I think much of the slowdown in the overall economy has happened in other sectors such as infrastructure, etc. India is primarily a consumption story. People often don't realize that up to 70% of the GDP is consumption. It's very similar to the United States and very dissimilar, for example, to China. And fortunately for now, at least that consumption continues to grow.
Just comment on this. We've seen the top line growth of India's top consumer companies, like Tanvi was just mentioning. Godrej Consumer as well seems extremely robust. What's the sense that you're getting on the ground? Is consumer confidence still strong? Do you expect it to be continue to be stronger?
Consumer confidence is strong. FMCG sales are doing well. We have done extremely well last year, and we continue to do well in this financial year. And we think this will continue.
Mr. Banga, as investment spending slows down, there is a camp that believes that perhaps consumption may be on its last legs and maybe the slowdown will catch up. Would you agree?
Well, I think there's no doubt that manufacturing investment seems to have slowed down. In fact, the latest numbers I saw didn't look very positive and encouraging. At the same time, bear in mind that companies that are in mass use products are seeing huge growth in value and volume. I mean, I saw the Hindustan Unilever results for the last quarter, which showed a 20% growth in sales with a strong underlying volume growth. And you see many other companies declaring results like this. Now, companies that are performing like that would continue to add capacity. I think it's other sectors where you've already seen the slowdown, where manufacturing investment has come down as well.
Mr. Godrej, after the budget, prices went up and people said the demand will eventually slow down. That hasn't happened. After the Reserve Bank of India cut interest rates by about 50 basis points, do you think the demand momentum will continue? Do you think that you're only going to see more consumption happening?
See, Harsha, the situation in the industrial front is different from the consumer front. What has happened is the Reserve Bank cutting the rates by 50 basis points is a very good signal. I hope they continue to do so. And I am hoping that they will be able to cut another 100 basis points during this calendar year. If that happens, yes, it will revive general economic growth and it will help revive sentiment. But as far as consumer products go, as you have seen the results of all the consumer companies, growth is good. And consumer confidence seems strong.
Mr. Banga, do you therefore believe for consumer companies there is considerable headroom for top-line growth? And are you going to see healthy quarter-on-quarter performance?
Well, I think that if India continues to grow at 6 or 7% in terms of overall GDP growth, that will continue to give strong growth to broad-scale consumption. Now, having said that, if that continues for 2, 3, 4 years, yes, of course, there will be a slowdown. But for now, I think it would appear possible for these broad consumer products to grow strongly, even with the 7% GDP growth.
I take your point, Mr. Banga. The question I was really trying to ask is, there is a belief, there are people who believe that the days for this easy, free-for-all 30% growth for FMCG companies are over and companies will have to work harder to perhaps extract the same amount of money, offer greater value to the consumer. Is that a perception that would meet your own expectation?
Well, first of all, I don't think it was ever very easy to ride growth in India because the Indian market, both from the point of view of the consumer is a really sophisticated consumer. I have traveled the length and breadth of the world, and I can tell you the consumer in India is very conscious of value. And that's a combination of looking for very high quality, but also looking for affordability all the time. So the Indian consumer is a tough person to please. And equally, at the same time, I think there is opportunity. But yes, it's going to get harder, for sure. The Indian competitor is also very, very hard. India has a lot of competition, not just the international players, but also some very good first-class local companies. So yes, it's going to be harder. It's a treadmill.
What about modern trade, Mr. Banga? Why is it, on one hand, when FMCG consumption is growing, why is it modern trade and modern retail has not grown as fast or as robustly as expected?
I think there are two challenges in India. The first is that there is actually in existence in India a very efficient fragmented trade model consisting of the neighborhood grocer, who often has historical or very low property costs. And up against that, you have another challenge, which is that as real estate, organized retail starts, they encounter very high property costs, especially in some of the big metros. And that is simply not then working out to a profitable business model. Now, many people in the past have said, well, scale will solve this problem, and they have thrown growth at it. But I think that's not worked. In many, many cases, actually, the fundamental business model that organized retail is using in India is often unprofitable. The ratio of rent to the overall selling price is dramatically different in India compared to many other markets in the world.
Mr. Godrej, would you agree? Is there a case where modern retail has got its formats wrong? Is there an issue of capital? Is it perhaps because they've not yet understood what model works best in India?
Modern trade is also going well. Traditional trade has grown well. Rural India is growing well. Urban India is growing well. As far as consumption is concerned.
All right. One last question, Vindi Banga. One question about business sentiment. You talk to business leaders from across the world. You're also talking to quite a few companies outside as well. What's the sense that you're getting, particularly the sentiment about India, the Indian market? We've spoken about FMCG consumption, but what's the sense like when we're grappling with governance issues and so on?
Well, there is no doubt that there has been a huge mood swing about India. And this mood swing is perceptible in the country, but it's also very perceptible when I travel internationally and talk to investors. 3 or 4 years ago, it was very positive. India could do no wrong. It was flavor of the month. And now it's actually the opposite. Now, to be honest, I do believe that a lot of news that has come from India has not been good at all, whether it's been the reversal of FDI in retail, or whether it's even been, for example, the way in which the railway budget was treated in Parliament. So there is a sense of inaction, there is a sense of drift, there is a sense of paralysis. And then last but not least, there have been the recent announcements on taxation, especially the attempt to put in place provisions to tax retrospectively. This has not gone down well with investors internationally, and is certainly dampening the mood of India Inc. as well.
Gentlemen, on that note, we'll have to leave it there. Many thanks for joining us, Vindi Banga, Adi Godrej, on this discussion. I'm going to take a break on that note. When we come back, well-known consumer expert and author Rama Bijapurkar joins me on this discussion to give her perspective on consumption demand and where it's headed. That's in a moment.